2024 proved to be another big year for tech stocks, but as investors prepare for 2025, a big question, will the Mag 7 continue to outperform, or is it time for investors to look elsewhere? For more on this, I want to bring in Mike O'Rourke, JonesTrading Chief Market Strategist. Mike, great to have you this morning. I do want to talk to you about what we're seeing with Tesla this morning, because it's been the outperformer of the Mag 7 since the election result came out. Does the delivery story indicate to investors that they need to be looking at the fundamentals of a company like Tesla more than they look at something like a story of what's going to happen with the Trump administration?
I think so. I mean, since the election, I believe Tesla and Apple have driven more than half the Mag 7 gains and have been the key drivers of the S&P 500 gains since the election. And obviously, a lot of that, especially in the case of Tesla, is based on Elon Musk's close relationship with President Trump. And here you have a situation where the fundamental story did not play out in Q4. I know the company's profits, et cetera, peaked a couple of years ago. So again, I mean, Tesla shares, I think they were up more than 60% since the election, which is, 7-8 weeks. So I think people were really caught up in enthusiasm, exuberance. And I think just in general, it's kind of taken over the market, especially the Mag 7 names. And I think it's time for people you don't have to come out of the market, but you should be looking elsewhere for a little more, protection, a little more value cushion there.
Mike, who are the most stable Mag 7 stocks in your perspective?
I mean, so the problem with the entire group is they collectively trade about 50 times trailing earnings. So they're expensive as a group, and they're making the entire S&P 500 as an index expensive. I mean, and each one has their own different nuances that make them attractive. Obviously Amazon's in so many different places, and now you can see they're making a push into AI semiconductors, where I don't want to say they're going to compete with NVIDIA, but NVIDIA being the only story for the past 2 years is about to end as they start to see competition from the likes of Amazon and Broadcom. Obviously, then you have Google and Microsoft making their pushes in AI, but Microsoft, for its early advantage it had in the beginning of last year, seems to be dissipating. So you're seeing tides change within that group. That again, I mean, I would avoid the group entirely and look elsewhere in the market.
So where else do you look?
So if you look at, for example, I think Josh in the last segment mentioned the S&P 500 equal weight versus the S&P 500. The S&P 500 due to the Mag 7 is 30% more expensive than the equal weight. But even if you don't want to go there, if you go to the S&P 400, which is mid-cap names, that's about 50% cheaper than the S&P 500, trading about 17 times earnings. And the same thing goes for the S&P 600 small caps. So trading, paying 16, 17 times earnings for different segments of the market, you avoid that quote unquote safety of those large names that you talked about. But again, people are paying a premium for those large names, so they don't represent any type of value or protection. And there is risk if these tides continue to shift among those Mag 7 names. There's risk. So we can have a year in 2025 where the S&P 500 is flat or goes down, but the majority of stocks trade higher. That's how big the disconnect is between those names and the rest of the stock market.
How much do you believe the rest of the stock market will trade based on the FOMC and what the FOMC decides to do with rates this year, as well as their balance sheet, versus what we may hear coming out of 1600 Pennsylvania Avenue?
I think the entire market's going to be driven by 1600 Pennsylvania Avenue. I think the beginning of 2025 is going to be all about watching President Trump and how his policies unfold. And obviously there's high expectations coming in. As far as the Federal Reserve, I think we got probably an extra 50 basis points of easing in 2024 that we didn't need. The economy has been fairly strong the past couple of years. And both years the Fed came in expecting it to be much weaker. So now obviously expectations are resetting that we won't see as many rate cuts in 2025. So from a Fed perspective, the good thing is hopefully they don't do that much. Maybe it's 1 or 2 rate cuts. And that will allow investors to concentrate more on those single stocks without worrying about the Fed and without worrying about, whatever the Fed's feeling this week, because that's kind of how policy has been prescribed over the past couple of years. So from that perspective, The bigger risk is about the uncertainty with policy and how successful will President Trump be in achieving these pretty lofty goals that have been set forth during the election season.
Well, something else that's pretty lofty is the price targets for 2025, Mike. The most bullish indicating a 19% gain on the S&P 500. You said to stay out of the Mag 7. How do we get gains like that in this market without those drivers continuing to be the biggest gainers for the market moving forward this year?
No, they have to be the biggest gainers. Basically, the Mag 7 is about 35% of the S&P 500. The top 10 names are 40%. The index is very concentrated. So again, it's kind of like, it's almost the point where you're making a single bet on these handful of mega caps that are going to drive everything. And I don't think that's, from an investment perspective, if you're thinking as a long-term investor, you want to be buying things that represent value that are going to be good for the next several years, not just trying to chase a momentum game over the span of 1 year. You want to be buying things that are going to be attractive and that you can feel comfortable owning for the next several years.
Mike, thanks so much for the insights and perspective. Our first morning brief guest of 2025. Appreciate it.
Thank you.